Hey guys, Mike here. So, oh boy, what a day in the market, man. I mean, just opened up all green. It's like, oh my goodness, we're going to all-time highs, and then just boom, crashed and burned, right? So, I only found one, maybe two pieces of news that hit at the time that reversal happened. So, I'll show you that. But man, this was like the biggest dump of data I have seen in a long time. It feels like. I mean, economic data out the wazoo, and 5 is good. 3 I'll talk about, which you definitely be on the lookout for here. And then we'll go into also an interview I found for you to watch out what's going to happen over the next 72 hours, something to watch out for. If you're one of those people, you got a list of stocks you're wanting to try to either add or get into maybe an initial position, or maybe one of these people just waiting for a major type of pullback or something. I'm going to show you that interview, as well as some definitely key levels to watch out for on the big ones that could bring down indexes if that's the case. But this is going to be rapid fire on this economic data, so pay close attention right here. And here's the good stuff that the market reacted to. Okay, it was GDP, bam, comes in at 2.4% above expectation, which was the key of the day. Everything came in above expectations, you can see right there. So again, economy is still strong. Then personal consumption, 1.6% up versus 1.2% estimated. As you can see right there, okay? Still spending. U.S. GDP, personal consumption, core price index continues to go down, okay? So that is a good thing. Then you got business spending plus 7.7%, which is the strongest we've seen since Q1 of 2022, as you can see right there. So that is still going up and actually had a very good quarter, as you can see. Then what do you got? The hot job market, man. We hadn't hit this number in a while. 221K versus 235K came under as usual, and continuous claims 1.69 million versus 1.75 million. So it is going in the opposite direction of what the Fed wants. Okay, so less people are needing those claims, less people are continuing on those claims because there's still jobs out there. And again, you're getting paid 15 bucks to flip a burger, or somebody said to push the press down on the burger. You don't have to flip them anymore because you probably get carpal tunnel now. But so you don't have to worry about that. And what does that lead to? You now have 46% of companies reported, and now you have the Q2 GAAP earnings per share up 7% over last year, the highest year-over-year growth rate since Q4 of 2021. And the other thing obviously is going to help, like I said, the dollar is still weak, okay? And you saw that today in some of the earnings, right? Meta absolutely destroyed earnings, raised their revenue guidance from 32 to 34.5 billion. The estimate was 31 billion, right? They obviously killed it, earnings per share as well. Then you got McDonald's. I told you how much they're charging for those freaking Hot Fudge Sundays, didn't I? Not a joke, right? The company reported global same-store sales at 11.7% versus 9.4% sales growth expected, right? And then same-store sales rose 10.3% over a full percentage point of what was forecasted at 9%, right? And there was some more earnings came out today. I know Roku, Intel, all of them are up after hours, so keep that in mind. And then here's the negative part, right? Once again, the market does not care about this, it seems like, but the manufacturing index come out of Kansas City and all that, minus 11 versus minus 10 estimate for new orders, production, and shipments all plunged further into contraction. So again, that part of it is just a disaster. Work week also fell deeper into contraction, so less hours, but employment edged higher, which of course the Fed don't want to see, and prices paid rose the highest since May. This is not what the Fed wants to see, all right? Then what'd you have? Hey, the Eurozone interest rate went higher today. They raised rates as well. So, of course, that's not a good thing, right? Should keep tightening. I mean, you can see, look at that, since July 2022, and what they're doing with the rates over there. So I don't know if it's the fastest in history for them, but it's a really fast pace. And then lastly on this right here, you know, obviously they're talking about these new banking capital requirements, stuff like that. If that happens, what could happen, you could see the biggest banks who are sitting on 118 billion excess capital, that take a huge chunk out of that if they're required to hold on to even more capital. So just keep that in mind, especially for, you know, there's other banks out there that obviously I think it's 100 billion or more, or whatever it is, in assets, I believe, or something like that. You know, but keep in mind, that's just less they can loan out. So just keep that in mind, because that should help tighten things as well, making things even more restrictive. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so, whew, that was a lot of data, right? But I mean, everything on the good part came out better than expected, which means the economy's still churning, right? We're still not having this earnings apocalypse, right? It's just not happening. Why? What I've been saying for months. People still have jobs. They're making more money than they've ever made, even though, again, at a certain income level on down, the prices are higher and it sucks, right? But again, at least half the country is not even responsible with their money. So they're just running up the credit cards. It seems great, and here we go, right? And so if them running off that balance sheet and everybody around the world keeps raising interest rates, maybe they're able to slow this down. But the truth is, it's like Mike Wilson said, I think we've all said it at least 10 times now, there's just way more money out there than we ever thought. And again, I keep telling people, because people are sitting in their houses, not selling them, sitting on a ton of equity, right? They're good. They're in good positions. I mean, what is it? 90% of people have a mortgage 6% or below right now. And it's an astronomical figure compared to historical standards that have it like below 4, right? And so just keep that in mind, okay? Keep that in mind. Again, they're paying out the wazoo for credit cards, by the way, those people that don't pay their credit cards every month. But that leads me to this interview here, something to watch. Just watch over the next 72 hours. And I've showed you this guy before. He'd been dead wrong, but eventually, a broken clock is right, what, twice a day or whatever it is. And so, again, he's a volatility expert. So we'll see. And whenever I say this might give me a 72-hour shot clock, I'm like, oh, I'll definitely pay attention to that, right?
At the end of June, right? And that we were very positive until July 19th. Guess what? Here we are, July 19th, right? A week ago.
So it's back on.
Until you got about 48 hours, right?
Okay. And what do you want to see in that time period?
So today is exactly what we needed to see at the minimum to hold on to our shorts, right?
Okay.
For right now. Tomorrow is a Friday. Fridays are dangerous days, especially in this window of weakness. We're still there,
okay,
right? If this Friday can fall apart, break below the 20-day in the S&P 500 on a closing basis, that opens the window, right, for continued downside going forward. If it can't. And this is the window that you play, that you try and take advantage of these things. That's the key. You have to understand these flows, the voting machine in the short term. And that's what we're playing.
And so we'll just pay attention. We'll see if the S&P does break that 20. We'll see if other key levels are going to be broken, which I'll kind of show you as well. But as far as the reversal today, I mean, you saw we ripped up, which you think to yourself, that's kind of weird. We just raised rates again. And I guess they were hawkish because they're leaving it up into more rate hikes. And if you keep getting data like you just got this morning, if that continues on, they're going to be forced to do more rate hikes because they see how strong the economy is, right? And so, but the only thing I can figure out, if you found something different, let me know. But the stuff about the banks came out as far as the capital stuff. But then what happened, because remember, here's the thing, huge gap up on the Qs. We go up like almost 1.5%, and then it just tanks between like 1230, 130, and it just proceeded on down for a long time. And what dropped was the BOJ discussed yield curve control tweak to allow rates over 0.5%. And it goes on as we scroll down here a little bit. And we just talked about this the other day. But the Bank of Japan will discuss tweaking its yield curve control policy at a policy board meeting Friday to let long-term interest rates rise beyond its cap of 0.5% by a certain degree. And so, again, this is where we're talking about their inflation is at 3.3% and all this other stuff. And they don't have that. But and they're a big buyer of not just their own bonds, but obviously U.S. bonds and things like that. So, that's the only thing I can find. If you can find something else out there besides the fact it was just a liquidity grab, let me know, please. That's the only thing we can come up with in our group. Now, when you look at the Qs, what do we got here? What happened? We came down, boom, right there on that trend line we talked about. There's 3 of these, right? It's in the middle of this channel. It's been in for quite a while now. So again, we're still way above the 50, about 4.5%. But if we break that channel, yeah, probably I would guess the 50 moving average would be your next target for sure. And so just pay attention, especially if we break 374-ish, I believe it is. So just pay attention to that, because the RSI, obviously there's that bearish divergence and stuff on there. We know that. We know we're due for a pullback. I've showed you what happens when we get this far above the 50 and stay above it and all this good stuff. And seasonality-wise, yeah, usually August, September is not the greatest of months. And so just keep that in mind. We'll see where we go on that. And we're talking about 5 to 10%, right? Which means stocks would go down further. And so it would be, maybe good buying opportunities and stuff, depending on how you look at it. Now the Dow, finally, we just talked about yesterday, right? 13 days in a row. Hadn't seen it since 87. Finally broke its streak today, down about 0.4%. And so, why are we shocked? I mean, you got to get it, at some point in time, right? But if you look, I mean, this thing is only 5% off its all-time high. It's like a lot of the rest of them, right? The S&P was off 5%, so they're so close. The question is, will we get there and then sell off? Will we sell off now and then start hitting all-time highs? Because it's not unusual to hit an all-time high, by the way, and then have a correction, okay? Not a crash, a correction. Right? It's just happened many times. The IWM we talked about, that trend line, that descending trend line, man, it is hard to get above. You can see right there, once it broke it, 6 days in a row now, we're below it again. You're getting an bearish MACD cross right there on the daily. Obviously, the RSI is telling us something. So, we'll see if we get a sell-off on this. If we get past that supply area right there, is right below it. But it's just been struggling at this level. It seems like forever, but it's actually only been a week. So just kind of keep that in mind. And of course, really, what was the big banger of the day? It was Meta. I mean, Meta crushed earnings. It was up 10% at one point in time. And so you got this huge gap up. Obviously, I just erased that whole rising wedge and stuff, even though it technically was back in it. And this is another one of those stocks, you'd love to see it bounce off the 50. But again, if we just scroll out, you can see it's not even that far away from all-time highs. Seems like forever, but I mean, just look at that rise. Take a moment to look at that freaking stock chart and look at the rise it's had. I mean, you'll be hard-pressed to find that at any other point in time. And so, Tesla, by the way, I tell you, man, I got to learn how to play this better when I get these alerts. But, about right in this area right here is where I got these alerts saying, hey, put sweeps coming all through here, right here at 230, 250. And then, of course, we go back to the chart. That's where I got it. And then, boom, that thing just sold down. I saw you yesterday we had put sweeps. It was flat. It was down. When we had the call sweeps, boom, what happened? It was up pretty big, But you can see that 268, nope, it did not close above it, obviously. Sold down, broke 261.50. It does not want to break the weekly low right there. Which we're setting around 254. It definitely does not want to break that because as we talked about, when we zoom out to the daily here, again, it breaks 254. You can definitely see more downside to 245. And then if we even zoom out even farther, you can see that big volume gap because it moved up so fast, right? And we go to the weekly, even bigger time frame. You can see it plain as day between like 225, 235, somewhere in there. As you can see where the support starts to line up and stuff. So, and we know how Tesla likes to move, right? It likes to move fast up, fast down. That's just the way it is, okay? If there's no news, positive news that is, and call sweeps coming through and you get these gamma squeezes, it just doesn't move like a normal stock does, okay? And so just keep that in mind because, again, the gamma can go both ways. So if you see put sweeps just flying in, people start pressing this down, it's going down, okay? Now, Microsoft, well, and this one right here, it's in trouble right now. I mean, it's starting to fall in this gap right here. And if it falls down, 315-ish would be where that gap's at right there. And if this one starts to go, even to go down there, it's definitely bringing the indexes down. I've showed you how much it's weighted in the S&P and everything. So again, it can recover tomorrow, maybe the next day. But when you're starting to see these big boys finally fall out of these channels they've been in for quite a while now, and the 50, that's the big one because the 50 is right there and it's starting to fall below the 50 all of a sudden. Then it's like, watch out down below. And you can see on the hourly here how it's just kind of hugging and then fell right just below the 50. But it could get a bounce because on the hourly you see it's oversold, right? And then there's Apple who reports next week. Hanging on for dear life in this channel, sitting right at the bottom of them. Again, this thing right here has been in that channel for so long, but it reports next week. We'll see if it falls out before then. Again, they don't guide, so the earnings, who knows what that's going to do. And speaking of earnings, the only thing we got going tomorrow is we'll have to listen to the oil companies brag about how much they're going to cut back on production and keep oil prices leveled up and everything, so gas prices can't drop. Charter, P&G will also report. There is some economic data coming out tomorrow. You're talking about core PCE price index month over month, year over year. Then you're going to have personal income, personal spending. They're expected increases on this, especially on the personal spending. And then you'll have Michigan consumer sentiment, which guess what? I bet it's positive. Because when earnings is up and the market's up, all of a sudden people are positive, right? So, that tends to be the way it works and stuff. So, let me know if you're playing any the earnings or whatever, or where you think the market's going, especially the next 72 hours. Do you think we're going to see weakness tomorrow? Because I just looked at the futures, and the futures don't really mean a whole lot anymore, because you'll see them be green and then go red in the morning. But right now, they're up as far as I can see. And so just keep that in mind. So, we'll see what happens tomorrow and stuff. It is Friday, so you got weekly options expiration coming up. And so we'll see if the market wants to play some funny shenanigans or not, or we'll do a reversal or an open gap again or whatever. But today's reversal was definitely hardcore, and it just kept on going. Everything you thought was going to reverse back up, it wouldn't do it. So again, let me know if you found any news to cause that reversal from what I did, but that's the only thing I could see. So again, and eventually, like I said, I play the markets in front of me, but I am definitely curious. I don't know if you are, to really see how this experiment plays out, because that's what this is, right? With every country. I mean, can you remember a time where countries were all raising at the same time like this? Except for China, of course. I mean, they're not going to do it. But Canada, Europe, Australia, us. I mean, just crazy. And at the rate they're doing it, that's even better. Like how fast they're doing it. Like, it's crazy, and trying to run off balance sheets and everything else. So, yeah, just let me know what you think, guys, and I'll end up seeing you tomorrow.